Let's talk about Patanjali Foods and see how the company has really performed. Let's see the official consolidated statement. Total income came in at around 8,912 crore. Most of this 8,899 crore came from core operations, with the rest from other income. On the expenses side, raw materials, stock purchases, and inventory changes took up more than 6,600 crores, and employee costs were 148 crore and depreciation came in at 61.8 crore. After all expenses, profit before tax was 2,485 crores. And here is where you notice the shift. That's quite a drop from 3,589 crore in the same quarter last year. Net profit landed at 1,803 crore compared to 2,627 crore a year ago. Earnings per share fell from 7.26 rupees to 4.98 rupees. So while revenue is holding up, profitability has taken a clear step back. Now switching to Screener for the performance trend. On the surface, sales actually look healthy, up 24% year-on-year to 8,900 crore. That might sound good, but here is where it gets tricky. Operating profit fell from 410 crore last year to 321 crore now. That is a 22% decline, and margins dropped from 6% to just 4%. If we see net profit, it's down 31% year-on-year from 263 crore to 180 crore. And compared to March 2025, 359 crore. That's almost halved in just one quarter. So higher sales didn't translate into higher profits. In fact, the opposite happened. Why it happened? Expenses have risen sharply, especially raw materials. The company is selling more, but each rupee of sales is bringing in less profit. That is not the performance pattern you want to see continuing for long. Valuation wise, at 1,765 rupees a share, Patanjali Foods trades at a PE of 52.5. That's a high price for a business whose earnings have just taken a big hit. So overall, revenue growth is strong, but profit growth is negative. The business has clearly been hit by cost pressures and efficiency has weakened. The real test now is whether management can either bring costs down or pass them to customers without hurting demand. And here is the big question for long-term investors. Is this quarter just a cost spike that will normalize, or is it a sign that margins in the edible oil and food business are tightening for good? Can Patanjali grow its other higher margin product lines fast enough to offset this pressure? Because strong sales means very little if profits don't follow. And right now, that's the story investors will be watching closely. So, what do we think? Can we sell, buy, or hold? Let me know in the comments.